we're finally getting to a place where it's a little bit consistent. Things are a little bit the same as last year, and then we're going to have some sort of tax legislation that happens this year. And it's just going to be a whole bunch of change again. So the pace of change is most definitely increasing. You got state and local governments that are, always on the move, and trying to keep track of that is a challenge.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, hey, it's tax time again. You think you finish your taxes last year and you never think it's going to happen again. And then, boom, here we are. It's tax time. A lot of changes happening at your least favorite three-letter agency in Washington, D.C., that's for sure. But it really doesn't matter because you have to manage your finances properly, and you got to meet these deadlines. The form's got to be filed. The money's got to be paid. It's that simple. But someone who's an expert in this is Chris Hervochon, CPA. And Chris, it's great to have you on the show. So, hey, 3 pieces of advice since we're coming up on April 15th. What are you recommending to all of your businesses that are your clients?
Yeah, so coming up here on as we're recording this, is March 26th, right? So 3 pieces of advice would be, number 1, be organized. Be as organized as you can, because at this point we're at a very tight turnaround. Be patient. Everybody's crazy busy in the tax world right now. And then the 3rd piece of advice would be looking out beyond April 15th. We know that we're going to get some tax legislation this year. We don't know exactly what that's going to look like, but we do know that we're going to get it, probably. So just kind of keep an eye out and see, what's happening, what's developing in Washington, and then how that might impact your situation.
Yeah. So what do you think? What kind of tax stuff you think is coming down the pike at us?
It's anybody's guess. I was on a webinar last week with the AICPA. They do a semi-monthly town hall and kind of just let us know what's going on in Washington and what they're paying attention to. And their message was basically nobody knows. Some of the things that I've heard are interesting. Like, maybe we're not going to have tax for individuals that are making less than $150,000. That's interesting. How's that going to play in with tariffs and, how the administration is looking at actually raising revenue? That's interesting. The provisions that are in the Tax Cuts and Jobs Act, which we had at the very end of 2017, that's effect in 2018. But what is actually going to expire, or what are they going to extend, or what are they going to replace? What's that going to look like? That's all very interesting, especially when you get into tax brackets and past serenity tax and things like that, which is kind of near and dear to the hearts of my clients. But all of those things are interesting, and what we're going to end up with is anybody's guess, I would say, at this point.
It's interesting because I live in Florida, which is considered one of the best managed states in the country for what that's worth. And our governor says he'd like to eliminate the property tax. And I mean, hey, we wouldn't want to get rid of that. But the thing is, they got to get money from someplace. The cops aren't working for free. The streets aren't going to fix themselves. And, one fire and the whole town will burn down. It's the same thing with the federal government. Now, I happen to have studied this tariff thing. Right now, we collect approximately $80 billion a year in tariffs. The effective tariff rate is 2%, right? So if we multiply that and made it 10%, all right, it would go up to $400 billion. This is just not enough here. Something has to, right?
Yeah, it's a waterbed, right? You push one thing down, the other side goes up, that sort of thing. And how serious are they really about getting to some sort of balanced budget, reducing spending and that sort of thing? So what number they actually have to get to? What does all that mean? It's an interesting kind of time.
Well, I firmly believe that there's enough fat to cut out of there to at least cut the deficit in half, right? I think so. We have
100%
economic growth. Maybe that's going to do it, but I think we've been in a recession for a couple of years, and they just redefined this recession last administration to fool everybody. So, they're saying a third, and a third. Third tariffs, a third government cuts, and a third economic growth. When you knock 1 million people out of work, or 500,000, that's going to affect your tax collections, right?
Yeah, it has to. It has to. It's going to take some period of time for those people to get reseated in, somewhere else in the economy to where they're being productive and gaining a wage and those sorts of things. And that means paying tax too.
Right. We don't have to worry about the businesses around those government offices closing down because they haven't been showing up to work for 4 or 5 years anyway. So those businesses have already closed. So that's really not going to have any effect, except maybe I wanted to call it the newspaper stand, but we really don't. It's not really a newspaper stand anymore, is it? But the guy who runs the little coffee bar in the building, maybe he got hit. Maybe he's been hanging on, praying these people are coming back, and now they aren't coming back.
Yep, 100%.
So it's an interesting phenomena here. Smoke and mirrors. I have a theory about the way they're going to get rid of the $36 trillion, but we're not going to go into that here. It's very ingenious. I've written an article about it. You can go over and look on financialsurvivalnetwork.com, but no doubt it's coming. Hey, so stay organized, keep all your numbers close. Now with digital information, everything getting sent to you digitally, it's a lot easier to keep track of your info than ever before, isn't it?
It is for those who are technologically savvy, for sure. You've still got a segment of the population who's not comfortable with things like tax organizers that are digital, client portals, things like that. Certainly interacting with the IRS in a digital way is theoretically easy, but in practice difficult, I would say, for a lot of folks. But certainly the tools that we have at our disposal are way better than they were, decade ago, 20 years ago when I was starting to get into the business. Online tax organizers, online tax software, all the good stuff. It's certainly made it a lot easier.
Yeah. So like looking at this thing, it's definitely easier, but there's definitely more stuff than they want than ever before, right?
100%. Yeah, it's not getting any less complicated, and in fact, it's just getting more complicated. You had a lot of folks in our profession were talking about that around 2017, 2018, when the Tax Cuts and Jobs Act came into effect. Right on the heels of that, we had everything that related to COVID and all of the stimulus, and all the accountants were certainly involved in that. So that's just more complexity, more to deal with. And then you had things like the states, how they're dealing with some of the provisions and or some of the state and local tax provisions of the Tax Cuts and Jobs Act. And now we're finally getting to a place where it's a little bit consistent. Things are a little bit the same as last year, and then we're going to have some sort of tax legislation that happens this year. And it's just going to be a whole bunch of change again. So the pace of change is most definitely increasing. You got state and local governments that are, always on the move, and trying to keep track of that is a challenge. And, it's just layered complexity that's just getting worse as we go through.
Yeah, well, maybe nobody's really talking about simplification, though, are they, Chris?
No, not really. I think probably the biggest hint at simplification that we've seen so far is, hey, we're not going to have anybody who earns less than $150,000 pay tax. But you still get into all these derivative questions around, well, what does that mean? Does that mean that they're not going to have to file a tax return? What is that going to mean from a state perspective? Are they going to be filing a federal or not filing a federal return, but filing state returns? Is it actually going to make it easier in practice? It's hard to say, but nobody's really.
Well, the future's always uncertain, right?
For sure. But I don't think anybody's really seriously come up with a simplification package that has gotten a lot of traction that I've seen yet.
No doubt. So, all right. Well, hey, tell us where we find you, how we connect with you on the web, and then your social media contacts, whatever.
Sure. Yeah. Best place to find us is on our website, betternumbers.cpa, and you can find me on Twitter, mostly on social, Chris Hervochon, and you can also find me on LinkedIn at Chris Hervochon.
All right. Excellent. Well, links in the show notes to this interview on financialsurvivalnetwork.com. Appreciate you coming on, Chris. And hey, happy tax season, and I'm sure you'll be happy when it's all over.
Yes, sir. Absolutely. Thanks, Kerry. Thanks for having me on.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.